Today we will be discussing some of the recent news surrounding NIO stock. Make sure to give us a like, and subscribe to the channel for more stock updates like today. Also, Webull is giving 2 free stocks, valued all the way up to $1,600, only after you deposit $100 on the platform. Use the link down in the description, to get your 2 free stocks, and now let's begin with our video. NIO reported today that it lost less money than expected in the third quarter, as cost improvements helped boost profit margins in a quarter in which NIO sold more vehicles than ever before. NIO's net loss for the quarter was around $154 million, or 14 cents per share, on total revenue of around $667 million. That was a significant improvement over its results in the third quarter of 2019, and enough to exceed estimates. Wall Street analysts had expected a loss of 17 cents per share on revenue of around $654 million. NIO Quarter 3 revenue rose around 146% year-on-year. They sold 12,206 electric vehicles in the third quarter, which is up 154% this year and its highest ever quarterly total, as China rebounded from the virus earlier this year, and Chinese consumers continued to flock to new energy vehicles. This is not only the first time NIO has delivered more than 5,000 units, but also the first time a Chinese premium car brand has sold more than 5,000 units per month. In the first 10 months of this year, NIO has delivered 31,430 units, up 111.4% year-on-year, and has delivered 63,343 units since June 2018. Deliveries are continuing to push the stock price up, and it will continue to be a gauge which investors can see the health of the stock. At the same time, Chief Financial Officer Stephen Feng said, NIO benefited from improved cost controls, and the greater economies of scale on higher production volumes. The result was NIO's second consecutive quarter of positive cash flow. The company's gross margin increased to 12.9% in the quarter, versus 8.4% in the second quarter, and negative 12.1% in the third quarter of 2019. Feng said that the company's order book has remained strong since September 30th. He expects NIO's sales to increase again in the fourth quarter, to between 16,500 and 17,000, generating revenue between $922 million and $948 million. NIO is continuing to grow, and they are taking control of the Chinese luxury EV market. NIO has achieved strong brand presence in China, primarily through the creation of NIO clubhouses for car owners. NIO has cemented itself as the cool brand in China's EV market, and is creating robust demand for the company's e-versus in China, that if you want an EV in China and can afford it, you're probably going to buy a NIO car. Hillhouse Capital liquidated its position in NIO late last year when NIO hit rock bottom, but the investment company appears to be regretting that move as NIO's situation improves this year. Hillhouse Capital was a major investor in NIO, and in 2015 it led $100 million in NIO Series A round of funding. On Monday, November 16, Hillhouse Capital released its latest position data, showing that it rebought a large amount of NIO stock during the third quarter. As of September 30th, it owned 2,411,000 shares of NIO stock worth $51 million. In addition to NIO, Hillhouse Capital also added 1.67 million shares of Li Auto worth $29 million as of September 30th. It added 916,000 shares of SPEN valued at $18.39 million in the third quarter. Hillhouse Capital has become bullish on the Chinese electric vehicle market. I think that NIO will be a long-term winner in this electric vehicle race. Make sure to give us a like, and subscribe to the channel for more stock updates like today. Also, Webull is giving 2 free stocks, valued all the way up to $1,600, only after you deposit $100 on the platform. Use the link down in the description, to get your 2 free stocks, and we will see you in the next video.